Hey guys, it's Canadian Kyle here, and welcome to the Wealth Holders Podcast. Today, I'm joined with Lynette Zang. She's the Chief Marketing Analyst at ITM Trading, a physical precious metals dealer. Lynette, how are you doing today, and where are you calling in from?
Well, I'm here in Phoenix, Arizona, and I'm really happy to be here, Kyle. Thank you for having me.
Yeah, thanks for taking the time out of the day to talk to me. So,
Absolutely.
Lynette, I like asking my guests what they were doing when they were my age. I'm 25, so what were you doing from 20 to 25 years old?
Well, I was in college for part of that time. And let's see, what was I doing then? 2025. I was also when I finished college, I went up and went to Las Vegas because that's where I got the best job offer. Didn't like that job. So I actually became a blackjack dealer.
Really?
Yeah, yeah. And uh, and then I got married. So that's what I was doing about that, when I was like in my mid 20s.
And then from there, you transitioned to the finance industry? Or?
Well, no, actually, I started in the finance industry when I was 15 because I started working at a bank.
Okay.
And then in college, I studied business finance. And when I finished and I went up to Vegas, it was the very first. Now it's normal, so you wouldn't think anything of it, but that was the very first 24-hour medical clinic. Um, but I was not very happy there, which is why I left. But I've always, and even as a dealer in Vegas, I mean, you're playing with other people's money. I mean, you're really playing with money.
Right.
And but after I got married, then I went back into banking and stayed there until after I had my children. And then I needed to earn more money after the divorce, and that's when I became a stockbroker. So, I've really always had my hand in it on some level.
Okay. And anyone that has watched your channel or ITM Trade and knows you're a gold bug, and I'm not going to get you to explain why you are, but maybe we'll get you to provide an example. So when you were 25, how many dollars did it cost for 1 ounce of gold, and what could it buy you back then? And if you were to sell that ounce today, how many dollars would it be, and what could you buy with it now?
That's a really good question. And back then, we were just transitioning onto a debt based system. So prior to that, we were at a goal based system. 71 is when that transition began to occur. So this would be like 78 or 9, early 80s going into there. So probably spot was about 42, 22 in that range. And then, of course, it went up after that because they allowed people to buy gold again.
Right.
But I do remember really clearly being able to buy a really nice leather purse with a $20 bill. And I wish I had bought fewer purses and more gold, to be perfectly honest with you. Um, Today, I looked at spot, but there's a premium above spot because spot was created in the transition from a gold back system into the debt based system. And they specifically created that spot is just a contract price. So it's supposed to represent gold in the ground, unmined, uh, but it's just merely a representation in a Wall Street product. It really does not reflect the true value of an ounce of gold, and nor does it at this point. It will, but not at this point. And nor does it reflect its true fundamental value, which I think is absolutely critical for people of any age, but to really understand the fundamental value of any asset or any instrument. Because what we've been trained to think is what Wall Street is showing us, when Wall Street is really like Las Vegas,
Hmm.
right? It's about gambling, it's not about creating real value. And so even though that period of time is absolute that I lived through is absolutely applicable to the monetary system. So I think I think a big problem, and let me kind of back up here to move forward,
Sure.
is that people don't really understand what money is anymore. Because money is supposed to reflect the value of your labor. And interest rates are supposed to reflect a couple of things. Number one, the credit worthiness, whether or not you're going to get that money back. And number two, what the value of that money is going to be in the future. So when we were on the gold standard, and this is a 1 ounce gold coin, 1889, right? Pre 1933. But the thing about gold is that it has the most functionality of any asset class. So you're looking at stocks or bonds or cryptos, those are used in this one area. And dollars, right? Which is what we work for
Yep.
and what we try to save for future use. But by design, it loses value over time. Inflation. When I was your age, inflation was a dirty word. Today, we're being told that it's going to save everything, that it's a good thing. But what it really does is it erodes the purchasing power value of the money that you work for. So it creates what's called nominal confusion. So this is a $20, 1 ounce, $20 gold piece. And you could buy a fabulous men's suit with that in the early 1900s. Well, guess what? Today at 1775 or wherever the spot market happens to be at this moment, well, that's what this coin is worth plus a premium. And actually, that's just the market value. That's not the fundamental value. The true value of 1 ounce of gold based upon its most important function. Does a lot of things, right? It's used in manufacturing, it's used in art, it's used in the monetary system. It's used across the entire global economy. So there's always demand. 100% of the time there's demand. Sometimes more, sometimes less, but there's always demand from the broadest base of buyer. This is really critical. These are the things that people have not taught you. But back in 1971, an average wage was $9,500. And a family of four could actually live
Yep.
on that $9,500. And I'm not saying that they were super wealthy, but you only needed one wage earner. Now, today, the average wage is $48,000. So on the nominal side of it, sounds great. Wouldn't you rather have 48,000 than 9,500? Of course you would. But you need two wage earners, and even at 100,000, most people are paycheck to paycheck, and they gave stimulus checks out to people with wages up to $150,000 for two people. What's that tell you?
Mm-hmm. Losing your
So,
dollar value. Yeah.
exactly. Now, I don't have these numbers in front of me, so I could be off on this. But if you took the average wage and you were paid in ounces of gold, it worked out to something like 238 ounces of gold. So if you never got a raise, but you were still paid in the same number of ounces of gold, that works out to, or the last time I did it, you can do the math on it now, something like 345,000.
Wow.
It is
So,
not the gold being that much more valuable.
mhm.
It is the dollar or the euro or the yen or any of the government-based monies that are that much less valuable.
Okay. So can I stop you for a second and talk about the fundamental value of gold? So
Absolutely.
we have had all this, like, I'm just an average Joe, but I can see that they're spending money in really weird ways. They're not making really logical sense. But at ITM Trading, you guys say that since 2008, the system has broke.
Yes, I'm
Now,
actually the one that said that.
yeah, so you say the system has broke in 2008, and I know you
Died.
study, you did, yes, sorry.
No,
So
no,
you,
no. I mean, the system died in
oh,
2008.
died. Yeah,
Died. Yeah, not broke.
got
Died.
it. Now, if it's dead, it's been 12 to 13 years from now. So with technology these days, how long could the fundamental price of gold be suppressed till? Like another decade? Are we going through the roaring 20s or?
Well, actually, in many ways, we are going through the Roaring Twenties, and there are a lot of parallels between the end of life and the beginning of life of the fiat currencies. Um, they can continue this as long as the public remains confident in the powers that be. This is a con game, so it requires confidence. So the reason why it appears like things are still moving forward
Yeah.
is because of all the money printing, right? They've just inflated the money supply, and that escalated with the pandemic. And that's continuing forward. So all this talk about great economies, and look at how much, I mean, I think China is coming out with numbers somewhere in the double digit growth for the first quarter,
Yeah.
but it's coming from such a low place, and it's based upon all of these new yuan in China coming into the system, and tons and tons and tons of debt. So debt can make things, it can make an individual appear to have a lot of money. I take on a lot of debt, I buy big houses, I buy fancy cars, I buy jewelry, I buy
Yeah.
clothes. People looking at me would go, wow, look at her, she's got a lot of money. But what I really have is a lot of debt. And at some point, I either have to roll that debt over, so get a new credit card and keep piling it on, service it, make payments on it, or default on it. And whether you're an individual, a corporation, or a government, those rules actually apply to everybody. The difference between, say, me and the government is that I don't have access to the printing press. They do, and they don't even need a press. They push a button with all the technology and they just create money. But the money system is still based upon constantly growing more debt, compounding that debt. So that's why the interest rates have to remain low, because obviously, if you have a lower interest rate, well, then you can take on more debt because you can handle servicing that debt. But it's not just not sustainable, it's absolutely not payable anymore.
So, okay, with income, it doesn't keep up with inflation.
Correct.
And with debt, isn't there good debt? Like the boomer generation has benefited from using debt to buy real estate, trade on margin accounts, and really accumulate their wealth. What do you say to the younger people out there and how they should view debt at this specific point in time? Because isn't that what we're supposed to be doing? Buying assets, buying stocks, real estate, starting businesses?
Yeah, you're supposed to be creating assets, and when you bring up debt, that's a really good point, because there are two kinds of debt. There is self-sustaining debt, and then there is non-self-sustaining debt. So the self-sustaining debt is you borrow money, you get an education, therefore, well, in theory anyway, I don't know that that's as accurate these days, but in theory, you earn more money and you pay that debt off. Or you go and you open a business and you're earning money and that is paying that debt off. So that's the good kind of debt. But the bad kind of debt is, you build a bomb, you blow it up, all of that money just went to blow it up. It's not going to be able to pay anything off. So, with debt, and the other piece on debt is whether or not it is fixed rate debt or variable rate debt. In this transition that we're already walking through, the reset of the whole system, variable rate debt will ultimately kill you, because what happens with it is that as people lose confidence, remember, interest rates are supposed to be an indication of whether or not you think you're going to get your money back. And
Mhm.
with all of the financial engineering thank you central banks and the managed markets, which they've been doing it forever, but overtly since 2008, 2009. The debt levels are not sustainable, they're not payable, so we're going to have to default on them. However, if I had to choose which kind of debt I was going to have, I'm going to take the fixed rate debt because the variable rate can change like that, but the fixed rate is a contract rate. And if you have something to offset and pay that debt off, that is exactly the strategy that the government uses.
Hmm.
So for the government, inflation is good because now you get a lot more dollars in, but your debt is fixed over here. And so in theory, you pay that debt off with dollars in this country that have less value. But you have to have something to be able to pay it off.
Right.
Because what we're going through right now is a complete reset socially, economically, and financially. And that's really where both gold and silver come in. Because this is real money. And because it's used across the entire global economy, there's always demand for it. So this has confidence. Now, we've been trained not to think of this as money anymore because that does not benefit the central banks or the governments. So we've been trained out of it. But if I showed you historically how this always goes to its true fundamental value because this is what they reset, they take in this country, in the US, or Canada too, because you have dollars there too.
Yeah.
But you take the dollar that has no intrinsic value. It's used in one place, it's used in the financial system as essentially a tool of barter. When they reset it against real money. That's why global central banks are accumulating so much gold, right? So they reset it, and what happens in terms of that government money, this now goes to its fundamental value, which is somewhere north of $12,000 right now, even though you can buy it at like 17, 18, $100.
Wow. Wow.
Great.
You're saying central banks are buying it, and some are, but I'm in Canada here.
Canada got rid of all of it. I'd be scared.
Yeah, so I was going to say, what do you have to say to the fellow Canadians out there like myself with a central bank that has no reserves?
I would say become your own central bank. That's what I would tell you to do. 100% become your own central bank. Buy silver, buy gold, make sure it's physical, make sure it's in your possession because if you don't hold it, you don't really own it, regardless of what your perception is.
Mm-hmm.
But I would say this to anybody of any age or anywhere in the world. If you want to thrive through this reset, then you need to have as much wealth as possible in real money that is currently severely undervalued. Because you tell me what other asset, with all of the inflation, all of the new money that's being pushed into the system, all that liquidity, you tell me what other asset or instrument is actually undervalued. None of them.
Mm-hmm.
They've been targeted for reflation, but not gold or silver. Why? Because a rising gold price is an indication of a failing currency. So you see the stock market's making new highs, but what they're valued in terms of, in other words, the currency, is losing value. And last time I checked, 1 trillion times zero was still zero.
Mm-hmm. For sure. So you talk about accumulating wealth, but you've had a lot longer time to accumulate wealth than a lot of the younger listeners out there. And even let's say this reset happens tomorrow, a lot of people won't be prepared. Maybe you could provide some motivation because I don't want it to be all doom and gloom. Like, what about hard work? Like,
Not. It is really not all doom and gloom. It's
mhm,
actually opportunities. But if you're not prepared, then how in the world can you take advantage of those opportunities? The system is dead, right? The biggest tool that central banks have in the current debt based system is interest rates. And you've
Right.
got the world anchored somewhere near zero, and many cases into the negative rates. And we're all going to negative rates because that's what will inspire us to consume.
Right.
But you still have to deal with the debt. So I don't actually look at it as all doom and gloom, but realistically and historically, we're going through a reset. So you need to have, everybody needs to have food, water, energy, security, barterability, which is what I use silver for, wealth preservation, which is what I use gold for, community, and shelter. And it doesn't matter what's happening in the economy. These are the things that we all need in order to have a comfortable lifestyle. Further, if you can accumulate more of this which holds its wealth and is severely undervalued, everything goes from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation, like a constant figure eight, right?
Right. Yeah.
So right now the value of these things are undervalued. The beauty part about silver is how cheap it is, right? So if you don't have, $2,000 to spend on an ounce of gold, do you have $30 to spend on an ounce of silver? Right?
Most people do. Yeah.
Right. And not only that, but if you stop and realize that silver, regardless of the form it's in, and gold as well, regardless of the form that it's in, is monetary at its base. Because it can be melted down and then utilized in any of those different areas where it's used. So, most people, maybe they have some sterling silver that they inherited or that's sitting in a drawer because people don't like it because it gets tarnished. I mean, for many, many years, I'd go to yard sales. I'd go to, the different stores, the resale stores, and look for sterling. It's 92.5% pure. I think I paid $1 for these, right?
Hmm.
Because they didn't want to polish them. Great, give them to me. I don't care if they're polished or not. So there are a number of different ways that people can accumulate on any kind of budget, and they need to. They really need to. You need to become your own central banker and secure your wealth. This will secure your opportunities. And keep in mind, it's the only undervalued asset class out there, is real money.
Hmm.
Because they don't want you to look at real money, they want you to look at fake money
Right.
and hold your wealth there. So at any age and with any budget, you can go out and you can find, at
Yeah.
whether it's yard sales, estate sales, even at antique malls. If you have a dealer that accumulates sterling, chances are pretty good they're going to have a lot that's broken, right? Bent, dinged, whatever. If you went in there and offered to pay spot for it, because if they sell it to a refiner, they're going to get less than spot. So that's another great way. You take $100, you find out, you go to an antique mall, say who has lots of silver, and when are they going to be here? And you say, hey, I'll pay you spot. You weigh it out on the scale. You test it. You make sure that it's real. And that's another easy way to do it with just a little bit of money.
Okay. So I've watched you talk for quite some time, and I've heard your mantra for quite some time, and I've also
Thank
heard
you.
that you say that food is usually the main issue when this happens. So if you look at today, you're talking about community, but what community? You can't even go see your neighbors right now. So what are your thoughts on building a community? Because you've done that for yourself really well in Arizona, right?
Hmm. Yes, and actually globally, because what
True.
you and I are doing right now is part of the community.
Okay. Yeah.
Okay. So there are different levels of community. However, and I guess it does depend to a degree on where you live and how much freedom you have. I think Canada's less free than Arizona. And there are some states in Arizona that are in the US that are not as free as other states. So it does kind of depend, but there are community gardens. Or even I converted my property into an urban farm, and my neighbors know that they can walk by and they can pick something, or they can come and volunteer, and then they get a full harvest. They get to take a lot of stuff home. And people have different skill sets. So it's harder, but it's not impossible because we do have that technology. So maybe you can't meet, face to face at the moment, but you can certainly create a group of neighbors and in a community, and maybe one knows how to lay irrigation in a garden, or somebody else knows how to build the soil in a garden, and somebody else is, a good beekeeper or whatever. And you bring these skill sets together so that when you can come together, you're already set. And that's a possibility that you can do with the technology today.
Well, now that we're talking technology too, with the with the digital currencies that governments will eventually roll out, I think a lot of people think that's going to be the case, a digital dollar.
Mhm,
Is that necessarily a bad thing? Like,
mhm,
who knows? Maybe they're listening to us right now on this little thing, but it's a supercomputer in your pocket.
mhm.
Now, is there, if governments were to do it, is there a way that they could actually have a digital currency that does benefit human society for the good?
If governments and central bankers are still in control, no,
Okay.
absolutely not, because their goal is to remain in control. And once we go fully digital, and we are, I mean, I no doubt about it, that's what makes having this outside of the system even more important. But look at China. I think China is leading the way. And you're crossing a street. By the time if you're jaywalking, by the time you get to the other side of the street, they've already pulled the fine out of your account. If they don't like your social score, then you can be locked out and shut out of many things. So jobs, the insurance rate that you pay, you're already seeing that with a credit score. So my concern, and I am of a generation that we liked privacy. Your generation is used to not having any privacy.
Right.
And that I think that's really a threat. No, I can't see any. I can't really see any good out of a CBDC, a central bank digital currency.
Okay.
It's more of the same, and it would be a way to change the system. So right now in the current system, once you get to zero, trying to push below that is really hard. And if you have a dollar, right, that protects your principal, not your purchasing power. But if you take a physical dollar out of the bank and you've got it, that at this moment prevents them from going below zero, because you would just hoard that money to try and preserve your principal. Once everything is digital, well, I mean, in dollars, you only have like 2 digits after the point. But on a computer, you have an unlimited amount of digits after that point. So it's a way, just like inflation was a way to rob you of your purchasing power, but you didn't realize it because, hey, you had a $20 bill 10 years ago, you got a $20 bill today. It's a $20 bill. I have $20. But what that bill would buy you 20 years ago, 10 years ago, a year ago, 6 months ago these days, is much different than what it'll buy you today. So now if you have a digital currency and you go out far enough on those zeros, they can attack your principal and you don't even realize it. And if they want you to realize it, which is what the International Monetary Fund is talking about, how far below zero do they have to go before you're sitting there watching your principal evaporate? And what are you going to do? You're going to go buy anything that you think might hold that principal better.
But they don't want to push the limits to that extent, do they? Where the
Well,
money
they're
gets.
talking about it, so I would say, yeah, they do. The whole world has evolved into consumerism.
Yes.
So, how are you going to get the consumer to consume? There's a big problem that's happening right now because people are unsure of their income. A lot of people are unsure of their income, and they're getting all of these stimulus checks. So, a lot of people are saving that money because they're uncertain of the future. They're not spending it, and the banks aren't taking on or making loans like they used to either. The
Hmm.
loan portfolio is flat. This is a big problem. So, how can they inspire you to spend that money that you're trying to save?
By slowly taking it away.
By rapidly taking it away.
Hmm.
The IMF paper that they came out with, the first one that they came out with, which was how to get rid of cash, breaking below the lower zero bound, so going below zero on interest
Sure.
rates. And then there were a number of follow ups to that. One, I think a year or two ago, was how to go deeply negative. So, yeah, there are cases where they don't want you to realize it, but there are other cases where they want you to spend. And that means they need you to see your principal just evaporating because of interest, not because you're actually spending it. That will inspire you to spend, which is what happens in hyperinflation, right? I mean, it
Hmm.
can be hyperdeflation. They're just the reverse of the same coin. It doesn't matter whether
What
it's deflation or inflation, there's ways to do it. I'm
what does
sorry.
the world look like of hyper deflation? Because I can, like, saying hyperinflation, I can wrap my head around it. Everything is extremely expensive. Your dollar's worth nothing. What's a world of hyper deflation?
Well, that's what they've been battling, right? So stock markets implode, crypto markets implode, real estate markets implode. So prices on everything go down. This is, if you can maintain your purchasing power, there's your opportunity. And guess what? After the hyperinflation, you get hyperdeflation. So maybe no, I don't see any way to avoid the hyperinflation. We may well get hyperdeflation first and then go into the hyperinflation because they have absolutely 100% since 2008 hyperinflated the currency. But where is it gone? It's gone into the stock market. It's gone into the real estate. It's gone into those areas that the central banks have targeted for reflation. That's not my word, that's their word,
Hmm.
right? And so you're looking at the stock market going up or the real estate market going up or the crypto market going up and you're going, woohoo, yay, yay, yay. But if you can only convert those assets into dollars, into government money, and you can't buy anything with that government money, then what good is it?
Hmm.
It's just a trick. It's like a smokescreen.
Interesting.
It's very interesting.
Yeah. But
It's
like
probably held my attention for my whole life. It's very interesting.
mhm. Because I see a lot of people, they invest in real estate in Canada. Like, you should see Canada. Canadians love their real estate. So
Mhm.
I'm super concerned with Canadians and real estate right now because once you start seeing that inflation not in assets and once it's consumer goods, that's where can you make the mortgage payments? Can you We're going to see a lot of people go underwater, unfortunately. I'm worried about.
Yeah, I think that's why we're going to end up with a global universal basic income, a UBI, because that's really, and look, this has been on the table for a long time, but I think we're now getting to a point with the level of unemployment and the level of asset prices that, I mean, here in the US, they've already begun. that experiment. But yeah, I think they're going to have to give people money every single month so that they feel confident they're going to get their money no matter what, or a certain level every single month, and then they feel confident to go out and spend instead of save. And I think everybody should be concerned. Look, you have to have a place to live,
Yeah.
right? So to pay for, like, I recently bought a bug out house, which is at a very remote location, so that, well, for now I can use it as a retreat, but should it get as nasty as I think it's going to get on the streets, and I live in central Phoenix, that I would have a safe place for myself and my family to go.
That's what I was
Right.
going to ask you. It's because you talk about security, but I'm like, I'm pretty sure she's downtown when
Yeah, I am. I'm right.
like
I'm in dead central Phoenix, and I do have layers of security on my home, so that helps me feel good. But when they had the riots here recently, and they weren't that far away from me, and I'm in a nice neighborhood here, but all around me is not so great necessarily. And I thought, "Oh, I'm not comfortable with this. I slept with a gun in my bed one night. That's no way to live." And that's when I realized the hole in my personal strategy. And that's when I started really looking for that bug out house. And thank goodness I finally closed on it, because it was a really lot of work to find it and get it. And yeah, it was not an easy thing, but it's, thank goodness it's now been accomplished.
so that has water, that has a garden, and that has
We have to put in a
your
hot
mantra.
house. It has solar, wind, propane. It has a well. It has two 6,000 gallon rain catchments with a filtration system and a gray water system. It does not have food up there yet, but that's the next step, is to put in a hot house to create the food. And in the meantime, I'm just buying long storage food, and also seeds. Sprouting seeds are a great way, very inexpensive. Throw them in your freezer. You rinse them off for 3 days. You have live food. So no, the food is not quite secure up there yet. But that's the only thing that is not in my mantra up there. I've got security. I've got, yeah, everything else. So we'll be putting that in shortly.
So it's just the select few people making the decisions of the many, and you say it's about control, but then it's just human mistake that it gets out of control at one point, and then anarchy in the streets. Like they must know that will come with UBI, wouldn't it?
No, UBI would be to calm the masses, right? But they do know that income inequality,
Mm-hmm.
which is created by the current system, will make, I mean, look at, we had a huge rise in globalism, right? And people, rioting all over the world. Well, pandemic helped get that under control. I mean, look at Hong Kong. China went in, and I mean, they were rioting, they were doing all of that. Not anymore. No, done.
Yeah.
The insurrection's over, and they're retraining their people. So you never let a good crisis go to waste, whether it was a coincidence or whether it is a planned event. You never let a good crisis go to waste, and governments and central bankers around the world have not let this crisis go to waste.
That's for sure.
Yeah, exactly. You know, but that should really make you more aware, because to me, I look at what's happening and it seems really obvious. Does it seem obvious to you?
Yeah, for the past 4 years, since I've been researching and looking around, it's been obvious. And now with the pandemic, people are you can hear people talking about gas prices, talking about food, and it's I'm worried it's just beginning. But like I say, I'm just a young guy, and I'm in my accumulation phase in my life. I'm not in the wealth
Right.
preservation stage. So when I said doom and gloom, I wasn't referring to you. I meant toward people my age that are aware of the situation, and it's hard not to look at it in a doom and gloom kind of way.
Well, what I can tell you is wealth never disappears.
Hmm.
It merely shifts location. So the goal should be to have that wealth shift
Yeah.
your way. And the the more independent you can make yourself, what it does is it gives you a lot more options and choices. And again, yes, I wish I knew at 25 what I know today. I had the foundation, I've had the foundation my whole life. But you're still young and you don't have those life experiences. I love getting older because I can look back and go, wow, I was there in 1971 and I was like 17 or 18 years old. So I was old enough. I didn't understand what was happening, but I remember what it felt like, what it looked like, what it tasted like. That you have those life experiences. And I could tell you without any doubt at all, you should be accumulating the heck out of as much gold and silver as you possibly can. And it doesn't matter if you buy jewelry or sterling silver, 14, 18 karat jewelry that's broken or dinged or what have you. I mean, that's really, I think, an opportunity where you can buy it. I mean, you're buying it no matter what. Obviously, this is what ITM trading does. So we can work with you, and we have a low minimum. It's $1,000, and so you can get some gold, you can get some silver with that. It'll be fractional
Hmm.
gold, but you can do that because you really do need both. However, on any budget, you can go out with $20 or $40, and you can pick up some scrap.
Yeah, for sure.
And if so at any age you need to be accumulating at whatever level you can.
Perfect. Thanks, Lynette. I really don't want to miss the vault segment because that's been one of my favorite parts of doing this podcast is to ask these questions.
Sure.
For the YouTube listeners out there, it won't be available on YouTube though until I get my subscriber count up. So people make sure to like, subscribe, share, try and get the subscriber count up because I don't want people to miss these. They can check them out at Apple Podcast and Spotify on the full podcast, but they're good. So let's get into it.
Say that. I'm really impressed with the fact that you've taken the time to start to learn and understand this. But I think that, money and its function and its most important function, which is to hold value over time, I think anybody of any age needs to really understand what money is because they don't teach that in school because if you understood it, and the current system and the future system that they have in mind for us, you would not agree. And they need you to agree. So we've just been really dumbed down about it. So I would say 100% keep doing what you're doing, getting yourself educated and helping to educate others because we have to come together in community to do it. That's why I'm here because this is a community and it's about education because they can't, I mean, how many times can you be lied to when you do not know the truth?
Right. Yeah.
It's time to take the blinders off. We need to, and your generation needs to, because my generation, I mean, I'm going to be around maybe another 30 years, maybe more, 35,
Mhm.
but you're just starting out. So it's your generation that is the greatest hope. And you're also the generation that has grown up with the technology that they're luring you into, keeping all of your wealth and all of your assets in a really vulnerable position. And it is so critically important for true diversification.
I'm interested to see what happens though, because we are the generation that's comfortable with tech, but we're also a generation that doesn't trust. We see what happens around the world. We're not all that dumb, and people are kind of getting
I know you're not.
distracted with Bitcoin and going in that tech. But I'm really excited to see when it really clicks for them, and they're like, wait a second, they can just shut off your account. Or I invested in Bitcoin in 2017, and I learned the hard way because I invested in a brokerage here in Canada, and it wasn't a lot of money, but the the CEO mysteriously died of malaria in India, and anyone that was on that brokerage account had no access to their cryptocurrency. So you were just completely out. So just thought I'd share that with you. I
I
think.
appreciate you sharing that. I mean,
Mhm.
because it's really important. And, you know, the original premise, because it came out in January of 2009, which was just before the central bank started the QE.
Pretty
And the
convenient.
premise was, and if you listen, they call it digital gold. But the premise was that you were outside of the system and therefore outside of that control. Well, now Wall Street's all over it. So, how outside of the system are you really?
Yeah, from your financially regulated bank to your crypto wallet, it's like as long as you can't take it out of the system really that I'm aware of.
And you know, and that's the challenge, and that's why having some of this stuff around is just really important in any form, in
Mhm.
any form. So I don't know. Maybe your parents have Aunt Bessie's silverware, sterling silver flatware. Ask them for it, or help them understand that it's actually really money at its base.
Mhm. Yeah,
So they're
because people of all ages look at what do you invest in? Because I tell them I do this podcast talking to companies, and they're like gold mining companies. Like gold, it's why? I'm like, well, that's why.
it- yes, but also the reason is because it has the most utility of any asset class, and therefore it has the broadest base of buyer.
Hmm.
That is so critical, and people don't even think about that.
Yeah, if you look at India or China, they opened the gates to let the Chinese buy bullion now, and I don't know. You would know better than I, but the price of gold rose pretty dramatically after that news.
Well, yeah, and that was 2006. And the way that China set it up, which is really pretty genius, we'll watch this unfold, was that most people in China buy gold through their bank accounts.
Hmm.
So they don't actually take physical possession of it.
Okay.
So it's much easier to confiscate it if you don't have it in your physical possession. In India in 2016, when they demonetized like 85% of the currency, they actually went door to door because Indians are known to hold their gold, you know, physically on them.
Hmm. Hmm.
So, yeah, you have to be aware because once this is in your possession, even though I can see it and I can touch it and it won't bend because you know it's nice and secure, but it's invisible to Wall Street. It's invisible to the government and the central banks. And frankly, that's how I like it.
Well, thanks, Lynette. I know we're pretty much out of time here, but I like my guests closing off. So go ahead and say whatever you'd like to say to the young listeners out there.
Well, you know, if you can really just listen to this podcast or the YouTube, if we get it on YouTube, listen to it over and over again, and please heed the advice. You know, at ITM Trading, I've been a stockbroker and I've been studying currencies since 1987, and there are patterns that repeat every single time. And even though they always want to say, but this time is different because it's really ultimately never different. So look at history, use that as a guide. Sure, you want Bitcoin? Buy Bitcoin. I mean, that's probably going to be the one to survive because Wall Street has decided that that's going to survive.
Hmm.
However, it is not outside of the system, so do yourself a favor and make sure that you have something that is outside of the system. At ITM Trading, we deliver everything, and the minimum is $1,000. If you can't afford $1,000, you can still go to the antique mall or yard sales or estate sales. Although it's not, it used to be really easy to find this stuff, not so easy anymore.
Mhm.
But it's still there. Make sure it's marked sterling or 925, then it's 92.5% pure. Uh, 14 karat gold is 85%, is 59% pure. 18 karat is 85% pure. So there are many, many different ways to accumulate, but do it, and get some food. Right? You want to make sure that you can eat, that you can drink. You know, it's food, water, energy, security, barterability, wealth preservation, community, and shelter, and just come together in community if you need some help to do it because you can't, you know, you're at a certain level, but you still need to do it at whatever level you can afford to. You're going to be much better off, and no variable rate debt. That'll kill you,
Perfect.
right?
Thanks for that.
A fixed rate debt, this goes up, you pay off that debt.
Yeah, exactly. Well, thank you, Lynette. I appreciate you taking so much time to talk to me, and maybe we'll have you on again sometime, hopefully.
I'd like that. You did a great job, and I'm happy to be here.
Thank you. Have a good one.
Bye bye.